What led the decline in manufacturing?
Okay, so let's talk about the employment side. We're still running for every three panelists that are reporting, two of them are still hiring. And I was a bit surprised our employment number went up, but it didn't go up a lot. I mean, less than 52, it's kind of marginal. From a prices paid standpoint, we're sitting at 87% of our respondents saying that they're paying the same prices or lower in the month of November, which is very similar to November, which is up from a 67% back in October. So there's definitely an impact going on here. The big story, I think, with ISM manufacturing is the lack of demand. We mentioned it last month. It's still continuing this month. You can see that the new order number probably had the biggest influence on the PMI easing off a bit again. And my whole demand measurement is the new export orders, new orders, obviously, customer inventory, which is still about right, not too high, not too low, and the backlog's still very weak. So we're waiting for buyers to re-enter the market here and re-up on their order book so we can get material flowing properly at the proper lead times.
Okay, so to that point, Tim, good morning, Happy New Year, it's Guy. How close are we to the bottom when it comes to this data?
Well, it's a good question. We just finished our forecast, and the survey panelists believe that the first half of the year is going to be a little bit more difficult than the second half for sure, but they don't see it as being a lot different from the second half of last year. So that's very positive. But if you look at what's happening here, we have 80% of manufacturing industries in contraction now, 80%.
Wow.
But that doesn't mean that could be a 49, could be 49.5. So I've been starting to track the percent that are under 45. And we had 31% in the month of December being at 45 or less. And some pretty significant industries in there too. And that's up from a 13% back in November. So we still seem to be on a decline here. But we're staying in that 48 to 52 range. I'd like to see us get back to 51. Hopefully January will do that. December is a weird month. I mean, and this year, 2022, it was a weirder month because people kind of just took a deep breath. A lot of people took vacations to get ready for 2023.
So, Tim, in theory, they're going to need to re-up their order books, like you said. When does that happen, ... What kind of recession are the companies going to be prepping for when they do that?
Well, we're thinking that we're not going to see a manufacturing recession. We're contracting, but for the whole 12-month period for next year, our outlook is pretty stable compared to 2022. So, where are the buyers re-entering? I mean, the lead times are still stubbornly high. We didn't have much of a movement in lead times on raw material in the month of December. Disappointing. Last month, I believe I reported that we were still 30% above the trough lead times. So we still have a ways to go. Prices are coming down. Suppliers are delivering better. The lead time, reorder lead times are still stubbornly high. And I think that's what we're waiting for to budge. Like I said, December was an odd month. January is kind of a reload month. February, we should get stronger. December was actually our biggest impact by seasonal factors all year. So the numbers would have been weaker without the seasonal adjustment factors. And that starts to shift in the February timeframe.